Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders to the COT data. So essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing and rejecting to the upside a quite significant level of previous historical resistance, which is now turned support. In fact, what we can notice here is that from this level, all these previous rejections to the downside were created. Every single time that the market tested this zone, it rejected it to the downside quite aggressively. Now, the market has broken above this zone, and what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. And in fact, that is exactly what happened here. The market broke above the level, the previous resistance was turned support, the market went and tested exactly that previous resistance turned support, and is currently still in the process of rejecting the level to the upside. So from a monthly standpoint, everything seems quite bullish. We can also notice that from a pattern standpoint, we have a very clear impulse followed by a correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have at 0.32 and 50% retracement levels, which are lining up perfectly with this previous resistance turn support, therefore creating confluence of support. And inside of a confluence of support area, there is an increased probability of getting institutional longing. And that increases the probabilities even more of having a rejection to the upside away from the level if institutions are longing inside of a confluence of support zone. So from a monthly standpoint, everything seems quite bullish, and there is still the possibility to see more bullish continuation and this impulse to the upside continue. Let's keep that in mind and drop down on the weekly time frame. Now, from a weekly standpoint, the situation is quite clear. We have a market which, from a weekly perspective, is currently bounded inside of this range. We have the previous high of the range, which is currently acting as resistance from which these rejections to the downside have started. And we have the bottom of the range here acting as support from which these rejections to the upside have started. Now, until the market will remain inside of this range from a weekly standpoint, we could simply expect more horizontal price action for this market. We can also notice that the market here has just created this W formation. And as I explained many times, after the creation of a W, what you would usually expect is first to see the correction and completion at the neckline, and then the continuation to the upside. So from a weekly perspective, there is a possibility to see a bit more short-term bearish price action and then a potential break above the high of the range. Now, let's keep this also in mind and drop down on the daily time frame. Well, from a daily perspective, this is where things really start to get quite interesting. In fact, what we can notice is that, first of all, we had this massive break to the upside after this impulse. I made a full breakdown explaining all the reasons for which we could expect first this correction and then this push to the upside, which is in fact exactly what the market gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But now, after the market has created a break to the upside and already followed with a correction, where is the most important structure? Well, before we dig deeper into what we have from a technical perspective here on the daily, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing. Now, if we check the data here for gold, what we can notice is that with the last reports, net positions have been massively increased from an institutional perspective. We went from having 131.1k net positions all the way up to having 285k net positions. So essentially, we had a huge increase of the net positioning, with institutions moving aggressively to the bullish side for this market, with institutions increasing their longs from 211k to 349k, so a huge increase of net positions of more than 100k longs added from an institutional perspective, and shorts got decreased quite a bit because we were sitting here at 86.3k, now we're sitting at 64.8k. So institutions essentially increased their longs and decreased their shorts, and currently we're sitting with 349k longs from an institutional perspective and only 64.8k shorts. So clearly institutions are positioned aggressively to the bullish side for gold with 285k net positions. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, what is clear is that this area is currently quite important structure. Was acting as previous resistance here, now is acting as support. These two previous rejections to the downside in red candles were created from here. Now the market is testing this area as support. We can also notice that if we extend this level a bit lower, this was also and is also the neckline area of the W formation on the weekly, which the market is supposed to test and then reject to the upside from a pattern standpoint. So all this area is very important support. And since it is very important support, both on the daily and on the weekly, there is a possibility, since institutions are already positioned to the bullish side, to see even more institutional longing inside of this zone, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, and we see more institutional longing, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.